Today, I don't expect any immediate new measures. I much rather expect that Madame Lagarde is going to give some indication that the PEP program would be enlarged, extended in the future. A concrete announcement is likelier in December. Were the ECB to take action today, it would be like going to the gas station when your tank is still half full, and a message, a signal that the ECB is ready to take action if needed, can instill confidence in the markets. When I think of other possible instruments, for example, further improvements of the conditions of TLTRO or the tiered interest rates for excess reserves, action is also likelier in December. Both measures are important for banks to buffer the economic shock in Europe. Less likely, I think, is action on the deposit rates, simply because they are already at very low levels.
What would have to happen for the ECB to act in December? Because you're saying when they monitor the situation, is it again a deflationary inflation rate or a negative inflation rate, or is it like a sharp drop in economic activity?
I think that it would really be about instilling confidence into the market. We are at a sensitive point in time with regards to the pandemic development, but also the economic outlook.
That brings me to the recent shutdowns. Well, perhaps we start here in Germany, because first economic analysis, which I've is indicating that this might chop off 1% of GDP growth in Q4. So what are your expectations? What it is doing to the economy?
Yeah. So just yesterday, Chancellor Merkel, together with the heads of federal states, announced a partial lockdown for Germany for 4 weeks, starting on Monday. If the measure is effective, we will surely see temporary setbacks in the directly affected sectors: hotels, restaurants, personal services, culture, events industry. However, the partial lockdown now has the chance to break the pandemic dynamic and could overall lead to a shorter period of time in which economic activity in these sectors and the economy overall is affected by the pandemic. Industry is likely to compensate with moderate growth for some of the losses, so I expect flat growth in Germany until spring. And with this scenario, I think that a growth downturn of around about 6% in 2020 is still the likeliest outcome. Growth for 21 is strongly depending on whether further containment measures will then be necessary and on when vaccines are available to a large part of the population next year.
Just very quickly, how much of a concern is the, again, shutdown scenario true for the ECB?
I think that this is most likely a point that they watch. I think that's also why signaling an indication of a possible extension, enlargement of PEP is likely today, not a concrete announcement. Also, when we look at the infection dynamic in Europe all across, we do see fast increases with different varying degrees of lockdown measures. For example, in Ireland, we saw a lockdown already implemented that also closed shops for a certain point in time. Large European countries also have strong infection dynamics. We are likely to see lockdown measures there as well. However, I think as in Germany, we will also see an avoidance of this broad shutting down of economic activity that we've seen in spring.